Michelle Snyder joins us, Market Gauge Group Managing Director. Eddie Ghabour, the Key Advisors Group co-founder. Michelle, to you first on the signal you got from Jerome Powell. I don't know whether it was a shocker as much to say we have a ways to go, but how did you interpret it? Did the market overreact? What do you think?
Well, I think right now he really tried so hard to be both dovish and hawkish at the same time. It's an absolute reflection of the dilemma we're in, which is, do we drive further into recession at the risk of reducing inflation, or do we worry about recession and let inflation run hotter? And he didn't really answer that question, which is why the market may have overreacted initially, because today we had the ISM numbers and then the market started roaring back. So it's really going to be, I think right now, two very important areas to look at in terms of forgetting about talk and what people are analyzing and saying. Just look at what the long bonds do right here, because if they start, and when I say the long bonds, I mean the 20-plus year bonds.
Right.
If they start falling in yield with the shorter term still rising, that shows that the market's worried about recession, which means they'll expect the Fed to do something more dovish. If the dollar starts falling, it means from this high, which I think it could, it means that everybody's concerned that no matter what policies go forth, things are out of control.
On that point, Eddie, and I think Michelle was referring to the sign that the services sector activity cooled a little bit more than was expected in October. And I'm just wondering, this is the battle we're going to be facing, right? The data that supports the Fed continue to do what it's doing, or data that hints of a pivot or change going forward. Is there anything you get from the day after here from the Fed that anything has changed?
Look, I think one statement he made that I thought was the most alarming, and look, it shouldn't have come as a surprise to anyone that they were hawkish. I mean, the one thing you have to give them credit for is they've told us that they're going to continue to stay hawkish, and why everyone thought they were going to turn dovish this time was a big surprise to us. But they are so worried about stopping early and have inflation reaccelerate that he said that they were okay or would be okay with over tightening. They would rather over tighten than not tighten enough. And so what that tells me is they're going to continue to pedal to the metal until the data that they look at shows something different. The problem is the data they're looking at is rear view mirror data. When you forward look out and look at the rate of change of things, they haven't given, in our opinion, enough time for these rate hikes to get into the system. So at the end of the day, we think that we are going to be in a recession next year. I think corporate profits and earnings in the fourth quarter and first quarter are going to be very, very challenged. And this market's not going to bottom until the first half of next year, because based on what we heard and read yesterday, they are going to over tighten, in our opinion.
Yeah, we might already be seeing the result of that. Guys, thank you very, very much. I apologize for the truncated time here. The Dow now has turned into even money here.